Welcome everybody back to our webinar series Learn to Trade the Market. My name, as always, is Stefan Friedrichowski. I think you get used to that introduction here. Today we have the 21st of February 2017, 2 o'clock as usual for our English webinar Learn to Trade the Market. Yeah, and by the way, many thanks to Argus FX because that broker makes that webinar series possible, so that we have that introduction to trading activities and how to trade the market itself. So those is the basic content of this kind of webinar series. So there's another one always on Thursdays. There we cover the topic developing trading strategies, but of course here already you learn a lot about how to come into that field of trading. Yeah, and don't forget the risk warning. As always, I have to mention that during those kind of webinars. So whatever you do on your account, you do it by your own. But of course, I know you know that very well. The topics for today are a little bit more practice. So what I would like to do, and I have been asked for that via email, that up to now we have in total 3 different trading setups, that it might be a good idea to have a little bit more practice with those trading setups. We have introduced another one last week, the multiple EMA setup. So that is the one I would like to recap in theory first, and then finally I want to go into trading practice for today. So we will look to the market or to the markets, so different underlyings. You know that we have 8 different underlyings under observation, and we we'll have a look whether it's possible to enter trades, either market or pending orders. So for those 8 different underlyings. Before doing that, we have to make sure that we have a common nomenclature for our comments within MT4. That's quite important that we later find in the history of our account that we can assign each trade to a specific trading setup, and we use that common field within the order placement of MT4 in order to distinguish between the different setups, so that later, if maybe in a month or 2 or 3 months, we recap our trading account and that we still know, okay, that trade has been according to that trading setup. That is something I always invite everybody to do, because that helps you and your trading activities later to be analyzed. That is very important, that we even in a couple of months, that we can analyze in detail our trading account in order to review our trading setups. Up to now, with first few trades, it's much too early to have any review on the trading setups itself. There we need really a couple of trades in the order of 100, so that will take a little bit more time. But anyhow, so I will introduce a nomenclature for our trading setups and stop loss setting. So last week we introduced another trading setup. You might remember that we have already 2 other one. One is follow trend, and the other was breakout trades or range trading. That was the name of choice. Last week we add another one, which is once again a trending trading setup. So it uses trends and tries to find good entries within a given trend. So it's a little bit similar to what you might have heard about market analysis, that you have those ups and downs with higher highs and higher lows, for example, which define an upwards trend. But always the critical question is how to find a good point in time, a good point in price to enter a trade into the direction of the trend. And one helpful tool is a so-called multiple EMA setup, which uses 4 different EMAs for identifying the trend behavior and to identify a correction within that trend behavior. This correction can be indicated by the fact that the EMA lines, that those come together. Just a second, because there is at least one guy who has no audio, but from my perspective, everything should work. So microphone is on, and I see within the equalizer here of my audio signal that audio is transferred, and let me check. Yeah, okay. So microphone is definitely on and is transmitted to everybody. Confirmation is here. So there's one. Maybe it's a good idea to check your own settings, and even you might re-enter the webinar. Then it should go hopefully okay. So in order to identify that correction within the trend, we use the 4 EMAs, and we look for that those 4 EMAs, let's call it, that they come together. Formally, that is a constriction of the 4 EMAs, and if that is the case, then it's a good point in time to open a trade, and the trade direction is simply defined by the slope of the slowest EMA. Technically, this kind of setup needs big CRVs, or let's do it in English here. So that is better naming in English is risk-reward ratio, and definitely what we need here is a risk-reward ratio bigger than 3, because our win rate is not that good with that trading setup, and therefore we need higher risk-reward ratios. So that is exactly what we introduced last week, and what I have done within my MT4 is something quite obvious. I have created so-called profile with my 8 underlyings, and within all 8 underlyings I have those 4 EMAs, as you can see here on my screen. And now everything is ready to be traded. So in principle, I have even prepared the same kind of profile for different time frames. So what we have here is the D1, so the daily charts, but I have used the same kind of setup for 2 other time frames, namely H4 and H1. So whenever I don't find something on D1, I go down the scale to H4 and finally to H1, but I will not go further down in the time frames because that is a little bit more dangerous in trading activities. But that is a little bit more advanced to go on smaller time frames. So just have a look on how it looks like here for the different profiles. Now this one is the H4 And finally, we have another profile here with H1. I always prepare those profiles because it's much easier to navigate and to investigate the different underlyings by those profiles, because you don't have to redraw everything within your chart. So I always use that kind of profiling here within MT4. So let's move back to D1, because that will be the first one here. But before starting now trading activities here, we need a common nomenclature here for our comments within MT4. And you might remember that slide already, until trend trading, range trading, and now the new one here, the new line is this multiple EMA. We have only one category here, not two like for the other two trading setups, and therefore we have only one name, and that name is quite obvious. I use the name multiple EMA. So we have now 4 different names for our trading activities, and we use suffixes for the stop loss setting, because that helps us how we derived our stop loss for our trade, and you know, no trade without stop loss. And I use the suffix ATR underscore ATR if I calculate the stop loss via ATR as introduced in the last webinars, and I use the suffix underscore chart if I simply get my stop loss out of the chart itself by some resistance lines or support lines or whatever. So, or it's just a maximum within a certain time frame. So, for example, if we would enter now a trade with our new setup, multiple EMA, then it depends simply on the stop loss setting, ATR or chart, and that will be the suffix for the trade within our common field for within MT4 order placement. Okay, but now, as announced, and that today will be a little bit more trading praxis, that we know how to use those setups. We of course start with the last one, multiple EMA, and if there's still some time left, then I will enter some additional trades, or we will investigate the markets concerning the 2 other trading setups, because there might be chances or opportunities as well. Good. So let's start with MT4, and you immediately can realize here, or you can derive just by looking to that single screen here, those opportunities which follow the trading setup multiple EMA. Let's start with a negative example. If we look for S&P 500, so in the upper left corner, then it's quite obvious that this underlying, the S&P 500, is definitely not a trading opportunity according to that setup right now. You can see here, okay, in November, so there we have had the situation that the EMA values have been quite close together, but from that point in time, those EMA built a very broad range, so there's absolutely no constriction at all. So S&P 500, not good for trading setup, multiple EMA right now. Same for Germany 30, which is the DAX, same situation more or less, so no trading setup. But let's move forward. Here, gold. Gold becomes now interesting. You see that our EMAs come together, that our slowest EMA is slightly decreasing still, so the slope is negative. So that is an candidate here, and I now make the chart a little bit bigger. Let me put this one here, so we have it not in front of the GoToWebinar control panel. And now finally we can see the setup quite well. Honestly, it's a little bit hard with the slope of our slowest EMA. So mathematically, we can have a look here by this mouse over functionality, and we can realize the value 1228.91. And if I go one step back, 1228.88. So honestly, or mathematically, there's a positive slope, but the overall behavior over the last couple of months for that EMA is downwards. So therefore, the trade direction here is still to the south. So we can open a short trade. And since the constriction is quite well, we don't need any pending order. So we can enter a trade here, simply market. So let me check where the price is, because we need to calculate our risk. So price actually is at 1230.78 right now. It will move a little bit up and down now. And in this case, it looks quite good to have a stop loss via chart. So maybe we can draw a line here. So this line is above the former highs, and it would be a so-called support line within technical analysis. So we have here a quite well stop loss setting. Let's give a little bit extra room. So I move it a little bit further to the north. So that means stop loss would be at 1250.34. And now it's time to calculate the position size for that trade. So what we need our Excel sheet for risk calculation, and we can enter here first numbers. So contract size here for, in this case, for trading gold, let's check is by right-click here, specification. So contract size is 100. Okay. So we can go back here. Contract size is 100, and let me write it down here, XRUSD 100, so that we later have always a number. The gold price is always in the US dollar, so we need the exchange rate, which is about 1.06 right now. So we want to have an entry at 1230.78, a stop loss at 1250.34, and the risk per trade is set to 50 euros. And as indicated, we need high risk reward ratios. So take profit would be at 11.7210 for risk reward ratio of 3. Let's draw that line within our chart so that we see it a little bit where that would be. And in order to figure out, is that in line with our expectations or possibilities for the next couple of days. So you see already what does it mean, couple of days. So the price has been at that level about 3 weeks ago. So the trade would need about 3 weeks to reach the target. That's okay. We can have a look further. What about swap costs for that kind of trade? Are they positive or negative? And you see, okay, for short trades, we have positive swap values, so that does not hurt our trade. It would be an extra profit for the trade as well. So everything looks good. So we can place that kind of order simply as a market order. So the order here, lot size has been calculated to 0.02. So we can enter that number here, 0.02, and we go market, and the trade setup here is EMA multiple. Or I think I did it vice versa. Let me check. So multiple EMA. So multiple EMA, and the stop loss has been out of the chart, so therefore suffix chart. Stop loss should be at 1250.34, and take profit should be 1172.1. And that's now the complete trade, and we can place that order. So trade is placed, and you see stop loss is according to our first red line, and take profit according to our second red line. So everything is well, and the risk for the trade is I hope I get the number via mouse over. So it's 38.35 euros. That we don't hit exactly our risk of 50 euros is obvious. You might have seen this already within the Excel sheet. So the nominal lot size has been 0.027. Since we can't trade that lot size, we have only the possibility the smallest unit is 0.01, and the step size is 0.01 as well. So therefore, we cut that lot size to the downside. In principle, we would have we could trade 0.03 as well, but then we would have a risk higher than 50 euros. So that is now the first trade already placed, and let's see how that will go further on. So we can go back to our charting here and do all those steps here back. And now still we have that old trade, this buy limit trade for S&P 500 that can be deleted now. So I will do that so we don't have that still within our charts. Now let's go further. Maybe there are additional chances as well. So let's look to the euro-US dollar next step, because it looks in principle quite okay. But let's have a closer view here within the chart, and then you can see the best chance is already a little bit too late. So there has been an opportunity for a short trade for euro-US dollar a couple of days ago. So now we are already still in the status that everything went already south, which was a intended trade direction, but we are too late. Now there's a little chance what we can do here. Entering a trade market short is a no-go. I would not do that. Especially looking to the chart here, you can see maybe there's a resistance line exactly right here. So there might be a correction back to the north once again. But still, we can foresee already what would happen to our EMAs if the price may go upwards a little bit once again. Then that constriction would occur once again. So let's draw a line, for example, here, and let's do that a little bit more to the south, like here. So maybe the price might go back to that level. Then I would exactly say, now we have a good opportunity. So that's nice. So we can place an order here, and what kind of order it would be is simply a sell limit order. So price has to go upwards until hitting that red line. Then the trade would be triggered to the short direction, and that is the preferred direction here out of the chart. Stop loss, quite similar. We can use a former high here and give it a little bit more space. So now we have once again two numbers. One would be the entry number of 1.07016, and stop loss would be at 1.08618. So let's try to calculate a trade for Euro US dollar as well. So let's go back to our Excel sheet. Contract size is 1000 and entry is 1.07016 and stop loss is 1.08618. And you can see the calculation is done here, once again, with a risk-reward ratio of 3. So that would give a take profit of 1.02210. So that's already close to parity for that kind of currency pair. And we should remember the lot size as well, which is calculated to 0.03 for a trading risk of 50 euros. So let's go back to the chart here and let's enter the trade as well. But now we remember that it is a pending order. So that pending order needs to be placed a little bit different as we practiced already previously. So position size 0.03, but now not market execution. Now it's a pending order, and the type, the specific type we use here is a so-called sell limit. Price has to go backwards, and then we want to go short. So that is already everything right. Now we can put all the other numbers, multiple EMA here for the name, multiple EMA, and the stop loss was set via chart, so therefore suffix the chart, and now the numbers for all those fields here. So stop loss is set to 1.08618 and take profit is set to 1.0221, and the entrance price, so the activation level for the trade, is 1.07016, and that's a complete order. Let's check the risk first. So volume is right, symbol is right. Now we can place the order. So what we have not checked before was the exactly limit or the line for our take profit. You see that would take a little bit longer here until we would reach our take profit. But still, that is possible within a certain amount of time. It might need, if the trade would be activated once again, 2 or 3 weeks until reaching that the target. And the good thing, what we have not checked before, but I know that otherwise I would have not opened that trade for a time frame of 3 weeks, that we have positive swap values for the trade as well. So a short trade on euro, US dollar is in favor with us. So it would earn money already simply by time. So that's okay. Therefore, we can live with that trade quite well. So back to the chart, that trade is placed, and you see, in principle, it's quite easy to apply that setup very fast, so it does not need a lot of preparation here. And therefore it's an easy to go setup, and it's not very complicated to go for that setup. So let's have a look to our remaining trading symbols, trading underlyings. So for example, Brent, same story as DAX and S&P 500, no chance, and we have an ongoing trade on that specific symbol already. So therefore, I would not open another trade for the same symbol. But now we can have a look here to US dollar, Japanese yen, which does not look that bad as well. So it's a little bit similar to Euro US dollar, and that's not really a surprise. So you know, just looking to the name of that symbol, US dollar, Japanese yen, it has within its name the US dollar. And we have already placed an order on Euro US dollar, but the US dollar is here the second name or the last name, and within US dollar, Japanese yen, it's the first name. So if Euro US dollar goes south, in principle, for a constant Japanese yen, the US dollar Japanese yen would go north. Of course, there's the Japanese yen, which is, of course, an independent currency, but we have to look that we don't make too many trades which really correlate to each other. So before going on with US dollar Japanese yen, let's first have a look to Euro Japanese yen. It might be that we find here another possibility. So let me zoom here. So looking back to the chart, you see, oh, there was a great chance in the history. You see here always that constriction of the 4 EMAs. So therefore, always there would have been an opportunity for a short trade. Nice, but history. So now we see that the overall trend behavior within the D1 chart has changed. So from going south, now the slope of the EMA is already upwards. So going here for a long trend would be a fresh new trend behavior upwards, contrary to Euro US dollar, which is nice that we maybe go here in different directions with the different forex pairs. So according to this setup, multiple EMA and look for constrictions within those EMA, it is a good long opportunity now. So let me draw some lines here as well. So a little bit more zoom. So you can see that the slope of the slowest EMA is still slightly positive. So going north here is okay. And what we can do here is we can have a stop loss which is a little bit more close than the other ones. So we might go, for example, here, and we will give it a little bit more room, a little bit more space like here. So, and now we can write down those numbers. So number is for stop loss would be 118.984, and the actual price right now is 119.817. And let's calculate the trade here into the long direction. And that's quite simple. It's a forex pair, therefore contract size is 100. Exchange rate right now is 119.8, and entry level is 119.817. Stop loss is 118.984. And you see that the lot size is a little bit higher because compared to our previous trade, our stop loss is a little bit more tight. So 0.07 would be the lot size, and the take profit would be at 122.316. Good. Let's check something for that trade as well, not in this chart, but in this one. Euro, Japanese yen. And we look for the swap costs here as well, and we will realize, okay, a long trade would burn a little bit of money. So that trade should be faster than the other one. But the good thing is our stop loss is a little bit more tight. That means our take profit is a little bit tighter as well. So it would not take that long time. Let's first draw the line for the potential take profit here. So take profit would be at 122 point, and I can enter the number directly here for horizontal line properties, and there we can enter the value directly, 122.316. And then we get the line already directly at the right position. So you see, this is not that far away, so it would not take that long if the trade or the direction would be in favor with us. So therefore, it's okay to have swap costs for the trade here. So now that means we can go directly in the long trade of Euro Japanese yen. So we can enter the trade. New order, and that will be done via market execution. So first we enter our comment here, multiple EMA. Once again, we use the chart for the stop loss, and the stop loss itself is set to 118.984 and take profit 122.316. Let's check the lot size. That is wrong here. So that was 007, and now we have the right lot size here, and we go long for that trade. So now we check once again, okay, take profit is the upper right red line, stop loss the lower one, and we can check the risk for the trade as well. And that is exactly more or less 50 euros. So that works well. And we are in line with our risk settings. So that is already the second ongoing trade and the third trade at all. So now let's recheck whether we might enter that trade in US dollar, Japanese yen as well. So let's think a little bit. So we now have a long trade in Euro, Japanese yen, and we have a pending order on Euro, US dollar to the short direction. If both scenarios would come true, of course, it would be a great trade for US dollar, Japanese yen going to the north. But now it's time to say no to that trade, because then we have something which is called a group risk, because all those trades would be too similar to each other, and therefore I will not enter that trade for US dollar, Japanese yen as well. Even the Euro US dollar trade is a pending order. So in order to get that order filled, first the Euro US dollar must have to go to the north. But anyhow, so that finally would be a group risk, and therefore I say no to that kind of trade. You see already our last underlying British pound, US dollar is a little bit difficult. You see, there's still a huge distance between the slowest EMA and the three others. There is already something like a constriction, but I know there's a better argumentation for a trade here going south as well. By the way, also here I would like to mention the group risk. Going south in British pound US dollar would be an additional short trade concerning US dollar, but there's a fourth currency pair currency involved, namely British pound. Before going with that trade, I want to change time frame. So we have now done all those trading activities or trading analysis on D1, but now let's move to H4. H4 is a good time frame for somebody not that heavily involved in trading. It's something between intraday and daily. Still, of course, we have 6 candles per day, because H4 means 4 hours, so 6 times 4 is 24. But still, you can use that kind of time frame for more daily activities as well. So let's have a look to the H4 scenario here as well. And let's wait until all the charts are opened. And let's go quickly through the charts here. You once again see, wow, S&P 500, no chance, no constriction at all, and so on. So the story does not really change here for most of the underlyings. The short direction of Euro US dollar is still in favor. For Euro Japanese yen, the story would be a little bit different. It would be in principle a short trade, yes, but no constriction. So hopefully we get a resist here so that our long trade is quite well. In US dollar, Japanese yen, constriction quite well, but now here we would go short as well. So that's not in line with D1, but anyhow. Let's go back to British pound, US dollar, and see how this looks like now. Now it becomes really a little bit tricky. So you see, there has been a time a little bit upwards, there has been a time a little bit downwards, now a little bit upwards again. So it does not really look like a trending behavior. We know I now change here to the D1 chart back. So really looking to the last couple of months, if I would enter a trade, I would only enter a trade to the short direction. Let's have an additional argument. Let's look to the swap costs for a trade on that similar level. So specification here. So let's see whether short is in favor, just from the point of view of swaps. Okay, still negative, but short is absolutely the favored direction here. So on a D1 chart, it looks not that bad. Why not going short? But on the H4 base, we have not a good situation here. And let's finally just for a second look for H1, which is not the favorite time frame for people looking for daily trading activities. But you see here, unfortunately, everything is already a little bit not constrict here. So final decision, no trade in British pound, US dollar. From the perspective of multiple EMA trading setups. Since we have still a little bit time here, let me check the other trading setups, because it only takes 8 charts that we can have a look to our previous trading setups, trend and range behavior. And what I will do now, because we have those profiles, I will quickly go through all those profiles like S&P 500 weekly, daily, H4, and let's look how the charts look and whether there's a good opportunity for a trade. S&P 500 on a weekly, upwards, daily, upwards, H4 upwards. So if one would have entered a trade a couple of weeks before, nice trade, but not right now. Let me change to the DAX, and now let's have a closer view here for the DAX. DAX. There we have it. So in principle, same story, but now, especially today, there's something special. And what is special today is that we have entered a new region. So looking to the last couple of days, weeks, and even months, we have a real new high here within the DAX. And you can see that quite well here. The price creates a line here, a gray line, and right now the price is exactly at our previous high. So now we can think about maybe that was all. So we have had a top here that was beginning of January, and now 1.5 months later we are at the same price tag. So it does not look that bad to say, okay, we know the trend is upwards, no question. But remember our kind of setups. Let me go through those slides. So within our trend trading setup, we found one subcase countertrend. So whenever we think we have been or we are too high, then it might be a good idea to go exactly against the overall trend behavior. Let me check this a little bit more in detail within the H4 chart here. So I will enlarge that chart and let me put it a little bit away so that it looks more like this one here. So we don't have the GoToWebinar control panel directly in the chart. What we do have here is now that we can create a little bit like a range. So what I would like to draw here is something like this one here. So, and you see that right now we are exactly at the border of that range. Let me zoom in a little bit more. And now we can find maybe a good trading setup. Let's assume we would go short directly. Okay, that would be really the risky trade at all. But let's look what happened last time when we have been at that price level. So we have had that green candle here, and afterwards there was a nice short behavior as well. So let's draw a line maybe here. So now the trading idea is to say, good, if the price goes simply upwards, okay, no chance, or we are unfortunately not within that trend and it's not our trade. But maybe we will hit that line going south, and then it goes further south because it has to correct towards the overall trend behavior, and that is the EMA line. So what about if we would open a short trade when we reach exactly that price level? And that price level is at 11,868.0. Why not? And now stop loss. Okay, we know that there is already a high which is at about 11,903. Let's give it a little bit more room to the north for our stop loss setting. And why not going for 11,922? 11,922.0. So we have a trading opportunity, which would mean, hey, for the last couple of days, we have been within a certain range. And now let's stay within that range. Or we have now two possibilities how to name it. We can call it countertrend, or we can call it stay in range. Both is possible. Both would support exactly that trading setup. And additionally, we have had a new high for the last couple of months. So that we are right at the beginning of a correction, why not? And the good thing is, if we would place an order at the red line to the short, it would be a sell stop order, and only if we come back here, then we would open exactly the trade. So let's calculate the trade. So with calculation, and you might still know that contract size for DAX trading is exactly 1. The DAX is priced in euro, so the exchange rate is 1. And now the entry price for our trade would be 11,868, and our stop loss would be 11,922. And you see, lot size is calculated to 0.92. Okay, but now we have to check whether we can trade lots with points within the DAX, and that's quite easy. We go to the specification of the Germany 30, and now we see contract size is 1, that is good, and minimum volume is 1. Okay, so what we need is a 1 here. That means we have finally a slightly higher risk than 50 euro, but only slightly. But that would be still okay. Let me write down the take profit, which is at 11,706. And by the way, swap is once again with us. So back to the chart, and now let's indicate that trade 11,706, so that is about here, a little bit somewhere here. So why not? That would be only half of the range backwards, so that would be a nice correction within that upward trend. So that will be our final trade for today, but let's now decide on the naming. So as already mentioned, we have two possibilities. It would be a counter trend trade or a stay in range trade. I will call it a counter trend here, and we took our stop loss out of the chart directly. So now we can place the order. So we have trading, and then we have a new order, and that new order is now with one lot, and it's not market execution, it's a pending order, and that pending order is a so-called sales stop order. So only if the price goes down, then we open the trade, but now to the south direction. So we can comment everything here. So it is a counter trend trade, stop loss out of chart, and we want to enter that short trade at 11,868, and the stop loss is 11,922, and the take profit is at 11,706. So that is now a good trade, and we can place that order. So now once again we have stop loss, take profit exactly within our red lines, and the risk of that trade, let's have a look here, is 54 euros, which is slightly above our original risk setting, but that is still okay. So now that's the trade, and let me go back to the overview here. So we don't need now any other trading activities. Let me do two things. One is here. So we have now 3 ongoing trades. An old trade on oil, now a short trade on gold, a long trade on euro, Japanese yen. And we have some pending orders within, and those pending orders are 2, one on euro US dollar, that was a short trade finally if we hit the limit, and we have a sales stop order on the DAX if the price goes down, and then we open a trade to the south direction directly. So a couple of trades, and you see it's quite going fast to analyze the 8 markets according to our 3 different trading setups. Today we have focused on the multiple EMA setup, but we have additionally opened one trade out of the category counter trend. So let's wait until next week how those trades behave, and then next week on Tuesday we will introduce another setup, because as promised there are still two setups to be presented here within the webinar series. So next week will be the next one, and then we will practice that as well. And then finally, we have an additional setup as well. Good. So that was the webinar for today. I hope you enjoyed it once again, and I personally hope that I see you again next week on Tuesday, same time, same day, and see you. Okay, have a good time. Until then, see you next week. Bye-bye.